Hey, what's up, guys? I'm Brian Horton with BK Trading Academy. And so I have a great investment opportunity that I will personally be investing in. For those who are in our academy and in our private community, you know that I drop this information. You know that I love to pick certain stocks and companies that I like to hold on to and may show some promise. So there's one in particular I'm taking a look at. It's called Lucid Motors. Lucid is a direct competitor to Mercedes-Benz, Tesla, and a few other. And so Lucid was based in California as an electric vehicle manufacturer specializing in luxury electric cars. And they were founded in 2007. The only thing is, since 2001 of November, their stock has been tanking. And the reason why they've been tanking is due to a number of things. But before I tell you why they've been tanking, let's go over some of the things that they do great in. Innovative in technology. One of their flagship models is called Lucid Air. Lucid Air boasts advanced battery technology developed partly through its experience in Formula E racing. And the car achieves industry-leading ranges from some versions exceeding 500 miles per charge. Now that is huge. So they're very innovative in technology. Luxury design is huge with Lucid as well. The vehicles are known for their sleek, futuristic designs and luxurious interiors featuring high quality materials and spacious cabins. Now, some of you may even seen some of these vehicles driving on the roads, specifically in the United States. You don't see them as often as you do Tesla. So bear with me, guys. I'm going to show you how much this stock is currently worth very little compared to a lot of their competitors. And why do I believe it is now the time to invest? And then we're going to weigh the pros and cons. We want to look at pros and cons whenever we're evaluating a stock. So they went public IPO in July of 2021. They did really good, but something happened in November 2021 and they just began to drop. And they're currently worth about $3 a share, give or take. Now, some of you may be asking, well, why would you purchase a stock at $3 a share, especially if they were worth more? Don't you think they'll just completely go to zero? Now, the thought process behind this is that, hey, you're purchasing a stock that's worth $3 a share. And for example, if you purchase, let's say 50, that will only cost you about $151, give or take. So you can purchase about 50 shares of a stock worth about $3 and some change for about $150, give or take. And think about the pros and cons. The cons is you can lose your initial investment. You can't lose any more if it goes down to zero. You'll lose $150. However, if price continues to rise, the sky is the limit, right? So you're only $3 away from zero, but the sky is the limit if it continues to go higher. Now, why do I personally believe that this stock may continue to grow? Let's get into it. So like I said, Lucid Motors went public in July of 2021 through a merger with Special Purpose Acquisition Company. That's SPAC for short. Now, while the stock initially saw a large surge due to SPAC hype and excitement around the company's electric vehicle prospects, it soon faced a correction, as often happens with SPAC deals. And they also had production challenges. So one of the key factors that has impacted Lucid's stock price has been production delays and challenges. So Lucid had ambitious production targets, but the company faced difficulties in scaling up its manufacturing processes to meet these goals. And as a result, the company has often adjusted its production timelines, which led to concerns among investors about its ability to deliver on its promises. So it makes absolute sense, guys. If you have a company that's doing really well, but it's having production complications, then yeah, of course the stock is going to drop. So in our course, we teach you how to read stock charts, how to read news, how to read earnings reports so that you know how to trade these certain things and what to look for before you just buy any type of stock. And you also have to remember that the direct competitor is Tesla. There's not a lot of electric vehicles out there that are luxurious, have cabin space, that are popular, that are affordable, but they're a direct competition to Tesla. Now, in my opinion, electric vehicles are going to continue to become popular for one reason or another. But I do believe this company is going to grow because they have been seeing large institutional investment. Institutional meaning banks, hedge funds, and a lot of these institutions have been putting a lot of money into Lucid Group. So let's talk a little bit about institutional investments. Institutional investors, including hedge funds and asset management firms, have shown interest in Lucid Motors, particularly in the early stages after its SPAC merger. Some prominent institutional investors have taken positions in Lucid, banking on the company's potential in the luxury EV space. Now, despite the stock's decline, some investors continue to view Lucid as a long-term growth opportunity. These institutional investors are typically focusing on Lucid's unique position in the electrical vehicle market. And they also have pre-order demand. So investors are also looking at Lucid's strong pre-order demand for its vehicles as a sign of potential future growth. This is seen as a key factor that could drive the company's future revenue through the ability to scale production remains a concern. So guys, think of this here. If this stock is worth currently $3 a share and it is an electric vehicle, we have huge investors coming together, even some in Saudi Arabia, and I'll go into that in just a moment. I think this is a perfect opportunity to use this as part of your investment portfolio. $3. If you only invest 50 at $3 a share, you're only paying about $150. Again, if for some reason this company goes bankrupt, you happen to lose $150. However, the sky's the limit, and this is something that I teach inside of our Stock Academy, where you want to find stocks that are promising. You want to do research on that company. You want to look at the past. You want to look at the present. Who's investing in it? What is the product about? Now, this is an electric vehicle company. Electric vehicles are popular, especially Tesla. And I think this is just another opportunity to allow this company to grow. It's already dirt cheap. And whenever you're investing, the whole point is so that you can buy very, very low. This is as low as you can get, guys, $3. If it drops to $2, you're not losing much. If it drops to $1, you're not losing much. However, the sky's the limit. And like I said, this is long term. This is position trading. So I may invest in this all the way until 2026 or at the end of 2025. So currently it's worth $3 a share. We're going to revisit this. I want you guys to keep an eye on this. And let's look at it around November or December 2025. And let's just see if it's more than $3. Even if it goes to $40, for example, and you have 50 shares, imagine how much you would gain. So let's keep an eye out on this, guys. Let me know in the comments, is this something that is worth investing to you, or would you completely stay out? And if not, what would you currently invest in the electric vehicle sector? Would you currently invest in Tesla, where price is currently at right now? Now, let's go ahead and look at a chart and I'll show you exactly what I'm saying. All right, guys, so I'm looking at the daily chart of Lucid and we can see price is currently at $3.01. Let's go to the monthly chart. We're going to look at the higher time frame and we're going to look at this huge decline. You can see how price was all the way here. The cap was back in 2021, was around $57 a share. Even prior to that, $64 a share back in February 2021. Here is when it went IPO back in 2020. So around this zone right here, it was only about $9 a share. And look at this huge decline, guys. Right? So remember, I'm going to show you a visual. Now, let's say Lucid went bankrupt and we've lost everything we purchased. And let's say currently we purchased 50 shares at $3. That will cost us only $150. Now, let's say price happens to drop down to zero and it goes bankrupt. This is how much you would lose on your investment, is only $150. Now, let's say price continues to go higher due to the investments of the institutions, the hedge funds, those in Saudi Arabia. The sky is the limit. And I can literally see price reaching back to this previous high. Now, it could take a year, it can take 2 years, it could be even sooner. It all depends. But this is where I believe eventually it will go to if things continue to grow in the electric vehicle sector. We have an earnings report coming out in February 19th, 2025. So we're going to look at that and we can see how each earnings report were read. It didn't do too well at all, but I do believe it's going to continue to climb. And so Lucid has secured financing from various banks and lenders to support its production expansions. For example, the company has raised capital through debt offerings and has established relationships with financial institutions to fund its operations, particularly in manufacturing facilities and R&D. Now, here's a strategic investment and partnership. Saudi Arabian investment. One key player in Lucid's financial backing is the Saudi Arabian government. Now, you have an entire government backing you, and not just any government, the Saudi Arabian. They're one of the richest governments in the world. Lucid Motors have received a significant investment from the Public Investment Fund, known as PIF or PIF of Saudi Arabia, which has been a major shareholder in the company since its SPAC merger. The fund owns substantial stake in Lucid and has been a key factor in providing liquidity and support as the company builds its production capacity. So in summary, although Lucid has faced many challenges, I do believe that it will revive itself. And then you also want to know, before you invest in anything, I'm going to continue to say this, evaluate the pros and cons. Do your research on their company. Figure out what makes them run. Who are the current investors? What's going on? Are they able to keep up with their production? What are their competitors doing? Oftentimes, a company can grow due to the failure of their competitors. So there's a lot of different things you want to research. This is some things that we talk about in our brand new Stocks Academy, which is linked in the description below. But guys, I truly believe from where price is currently at, it will eventually grow, and it just may take some time. But this is considered long-term investing. It's only $3 a share. And this is something that I personally will be investing in. And if it happens to be a failure, I only lose my initial investment. If it happens to grow, the sky is the limit. And so this is something that you want to find in penny stocks or stocks that are very cheap. So guys, let me know in the comments, what do you think about this? If you're interested in learning how to trade stocks with structure and guidance, with a strategy in mind, I suggest you guys take a look at our website in the description below. In the meantime, I will see you in the next video. God bless you.